Good morning, good afternoon, good evening, everyone, depending on which time zone you are at. I wanted to welcome you all to this session focusing on private capital and infrastructure as part of AIIB's annual meeting, which is taking place virtually this week. My name is Kevin Liu. I run the Asia business for Partners Group, a global private markets firm, where actually infrastructure is one of the 4 private asset classes we invest in. Partners Group manage about $130 billion, all in private markets. And I'm based in Singapore. We have about 300 employees here working with our partners in Singapore, in Asia. I want to thank AIIB for having me here to moderate this panel. I will be joined by 5 distinguished speakers, whom I will very quickly introduce. We have Mr. Konstantin Limitovsky, who is the Vice President of Investment Operations at AIIB. We have David Rubinstein, who needs no introduction, co-founder and co-chairman of Carlyle Group, one of the largest private equity firms globally. We have Dr. Alicia Carrero, a chief economist for Asia Pacific for Netesis. We have Lito Camacho, the former Secretary of Finance and Energy of the Philippines, as well as Mr. Primad Thomas, the CEO of Bayfront Infrastructure Management. This is a strategic partnership between AIIB and Clifford Capital in Singapore. So with that, let me first invite Mr. Konstantin Limitovsky, the Vice President of AIIB, to make an opening statement. Konstantin, over to you.
Thank you very much, Kevin, and thanks for pronouncing my name better than I do, actually. Distinguished panelists, colleagues, partners, and friends, it is my great pleasure to open the session of AIIB annual meeting dedicated to private capital mobilization and global infrastructure market. Sure, the exciting topic is going to have we are going to have an interesting discussion on this one. As Vice President of Investment Operations and chair of the chair of the working group promoting the private sector mobilization and private sector investments, I really hold this mission close to my heart. As we all know, modern infrastructure is vital for economic development and job creation. And the need for infrastructure finance is going to be even more pronounced and urgent post-pandemic as the world is facing overlapping crises. Sovereign funding alone can only meet part of this need. That is why AIIB is committed to catalyze private capital to play a fundamental role in building the sustainable and climate resilient global infrastructure. We call it infrastructure for tomorrow. We have already achieved impressive results in this way, although we're still relatively young institution. In our seventh year of operations, we build a strong portfolio on non-sovereign financing, moving from initial stage of third-party referrals to the systemically operating, structuring, originating, and executing standalone transactions. We established a strong track record based on our robust capacity and deep sectoral expertise. Let me support it with a little bit of recent statistics. By the end of last quarter, we approved 70 non-sovereign projects for a total amount of 7.7 billion. That is today 37% of the total number of all the approved projects by number. From the year 2016, the start of AIIB, to the last year, the end of last year, AIIB mobilized a total of close to $5 billion of private capital for infrastructure development, all of that for infrastructure. We started with just $20 million in the year 2016, and last year it was 1.4 billion. And we are working hard to keep this momentum going with even higher expected numbers this year. The variety of instruments we are using is expanding too. Besides classic sovereign-backed and non-sovereign-backed debt, new products like equity and some capital market, innovative capital market instruments, already part of our everyday toolkit and account for close to half of our non-sovereign approvals. One of the recent examples I wanted to mention of such private capital mobilization is Bank Muscat Green Finance Facility. In addition to our 150 million A loan on our own account, we mobilized the 50 million parallel loan from Exim Bank of China. The syndicated loan will facilitate the development of more sustainable infrastructure projects in Oman. Another good showcase is our Sirdarya 1.5 gigawatt combined cycle hidden power plant in Uzbekistan. AIIB and EBRD with 300 million co-financing as an anchor IFIs, catalyzed $740 million of private debt and equity. Several commercial banks joined, including Bank of China, China Construction Bank, Societe Generale, Texas, Standard Chartered, supported this project under the MEGA political risk insurance. And First Abu Dhabi Bank provided Islamic equity bridge facility. It's just an indication of the sophistication of the transactions, of the private sector transactions, which we are doing together with our partners. So private capital mobilization is one of our 4 key thematic priorities for the AIIB corporate strategy. We ourselves set an ambitious target of growing the share of non-sovereign finance to 50% of the AIIB overall portfolio by 2030. This is a major strategic shift for the multilateral development institution like ours. And we target to achieve this goal by growing our pipeline of private sector projects, developing innovative financial instruments, and continuing collaboration with the other financial institutions. AIIB team is devoted to nurturing an internal culture of innovation excellence and unwavering focus on client needs. Our team is developing the pipeline of private projects with a focus on decarbonization, connectivity, and the projects which we can scale. This is exactly what our governors were telling us and continuously telling us to do, including in today's afternoon session. Another solid example of our innovative instruments, which we are today involved in infrastructure capital, it relates to infrastructure capital recycling with the Bayfront Capital. I'm delighted to welcome Bayfront Premont Thomas, who is with us today, and I hope that Premont would share with you the practical experience as one of our strategic private sector clients. Our interest in growing social infrastructure investments and most promising avenue for the development of PPP, new PPP formats. We can add values through the de-risking and credit enhancements. We're also seeing the great prospect in offering bespoke early stage capital, risk capital for climate and decarbonization developments globally. And I'm welcoming also the Lito, our member of our advisory board, who's been advocating that. And thanks for your leadership in this direction, Lito. We're enhancing our co-financing and syndication capacity, broadening our local currency offering, introducing partial risk guarantees, exploring the frontier of direct equity and venture capital, as well as blended finance for our lower income countries. We're strongly committed to deepen our engagement with the leading infrastructure sponsors into the strategic collaboration while nurturing long-term partnership with the financial institutions and funds active in the infrastructure space. We look forward to growing together. And we stand out for our pledge to put our client interest at the center of everything we do, to make AIIB the go-to bank for partnerships with private capital and in infrastructure finance. I cannot see, but I'm sure that our private sector clients in the audience today, and I'm thanking them for the great business, and I thank board for good support. And it's already high time for me to warmly welcome our session panelists to this important discussion. Thank you.
Thank you, Konstantin, for your comments. I heard a few interesting things which we will pick up later in the panel discussion, including risk mitigation by MIGA, etc. But at this point, let me invite David Rubenstein to make a few remarks on behalf of Carla. David?
Thank you very much. As somebody who might be watching this presentation might say to himself or herself, what are they really talking about? Enhancing Asian infrastructure projects at this particular time? As we know, right now, there are some real challenges to the investment world and to the geopolitical world. And I don't need to detail them very graphically, but the truth is we all recognize that right now, the most important bilateral relationship in the world, the US-China relationship, is not at its best point. And as a result, there is some concern about people in the United States investing in China. There's some concern in China about the United States' overall economic interest in investing in China or letting Chinese companies invest in the United States. And as a result, among other considerations, it's clear that there is some tension between the US-China, and that is having some spillover effect throughout Asia. Secondly, there's an economic downturn going on around the world now. Because inflation is very high, it's likely that interest rates are going to come up much higher than they already have. And as a result, you're not only going to have higher interest rates around the world for some time, but you're very likely to have much lower GDP growth and therefore much higher unemployment. So at a time of US-China complicated relationship and a time when the global economy, particularly the Asian economy and the US economy, are going to be slowing down a bit, and you're going to be seeing higher unemployment, why would people say that they should focus on Asian infrastructure investments? Well, I think there are a couple good reasons. One, I do think that the US-China relationship is complicated and it's not going to get better overnight. But I do think that the business world and the investment world can show that it is able to overcome those political and geopolitical concerns. And I do think that the governments in both the United States and China are not interested in seeing infrastructure investment go away. They would like to see more infrastructure investment. And so I do think that this can be a very good sign that the US-China relationship and the overall Asian-US relationship is in reasonably good shape, because infrastructure investments are going to be allowed to continue and I think help Asia a great deal. So it's a good time to go forward, because I think despite the geopolitical tensions, I do think that the need for infrastructure investment is very, very great in Asia. Secondly, I think Asia can be the place that shows the rest of the world how to really build 21st century infrastructure. We all have lived through 20th century infrastructure, and 20th century infrastructure had a lot of its pluses and minuses, but it got us through the century and did marvelous things for us, things we never thought of at the beginning of the 20th century would be possible. But now at the 21st century, and we're a fifth into it, we now have to recognize that we need a different type of infrastructure. Let me just mention two types of infrastructure where I think we need to build them out, and Asia can be the showcase for the world. One is infrastructure related to climate change and the need for energy transition. We have wonderful infrastructure in many parts of the world dealing with 20th century energy needs and energy supplies, but we really need to have energy infrastructure dealing with climate change related and energy transformation related infrastructure. Things that are, let's say, not dependent on oil and gas or coal, but are more dependent on more renewable wind, solar, or other kinds of, I'd say, healthier types of fuel and healthier types of energy. And so to the extent that Asia can be a leader in showing what 21st century infrastructure can be, I think it can be a sign for the rest of the world of the need to move forward, because if Asia is going to build this kind of infrastructure, the rest of the world should do so as well if it's going to be following Asia's lead and be competitive. Secondly, the world is also in the 21st century becoming digitized. The things that we never thought would be possible 20 years ago are now possible, and even more things will be possible in 20 years from today. And so to the extent that we recognize the need for digital infrastructure and to change the way we build our infrastructure so that the digitization of society can move forward unimpeded, we will need to build out much more infrastructure in Asia. And an Asian infrastructure that's digitized and enables the world to be better digitized, and Asia better digitized, will, I think, be, again, a showcase for the rest of the world of what can be done and what should be done. So my point is that even though there are some geopolitical tensions between U.S. and China, and even though there's some economic challenges, obviously the world's facing, and obviously China and the U.S. are facing as well, I don't think we should basically put everything on hold. I think now is a better time to move forward than ever with the kinds of infrastructure that can be a showcase for the world. And the two of them that I think are particularly attractive, and my own firm is very interested in investing in these in Asia, are things relating to the energy transformation that we're all now seeing and that we need to make, and the digitization of society and our economy that we also need to see and make certain that they're going to get done. So I think the Asian Infrastructure Bank can play a very important role in helping to make this possible. And I do think that the world will be a lot better off if we actually move forward with some of these 21st century infrastructure projects where you see a combination of government and private sector forces coming together to show what the 21st century really needs in infrastructure, how it can be built with private sector and government cooperation, and hopefully be a showcase for the rest of the world. My own firm is committed to participating in this, and we do think that the Asian Infrastructure Bank can play a leading role in this, but other organizations also need to participate. And to the extent that the Asian Infrastructure Bank needs assistance in any area, obviously there are many other entities that can help as well and provide support for what the Asian Infrastructure Bank is doing. But in the end, the private sector, I think, needs to take an important role in playing a leader in building out these 21st century infrastructure projects. And if we do so in Asia, I think the rest of the world will follow in time, because the rest of the world will see that Asia is taking the lead in building the kind of infrastructure that's needed in the 21st century. Thank you.
Thank you, David. I think those two thoughts of you, one is geopolitics aside, infrastructure is a worthy cause, right, for the long term. And the second is that Asia could lead the way, as Asia has been leading the way on some of the infrastructure area. I completely agree. And I would also echo what you mentioned, areas such as sustainable infrastructure or green infrastructure, areas such as digital connectivity. These are actually very good areas for private investors like ourselves to channel some of our capital to, and both for the society in terms of productivity and sustainability, as well as to serve as economic drivers, right? So for myself, David, we know each other. I used to work for the World Bank and MIGA. So infrastructure has always been close to my heart, and with Partners Group, infrastructure is one of our very important asset classes, right? So for example, on digital infrastructure you just mentioned, we made an investment last year in the Philippines in a joint venture with one of the local groups, and to build telecom towers, right? Because we believe that it's very important for a country like Philippines to have that type of sort of international capital to be involved and to go forward. So David, let me follow up on one question. I think you mentioned Carlyle Group is looking at the infrastructure space. I mean, Carlyle Group, just like us, right? We invest in a lot of other asset classes in private markets, private equity, debt, real estate, etc. How do you see infrastructure as a relatively young asset class in your menu, so to speak, when you talk to your LPs, right? And I assume infrastructure is a relatively smaller part of your AUM, right? For us, we manage about, I would say, 25 billion out of our 130 billion, right? Our buyout fund is fund 5, our private secondary fund is fund 8, but our infra fund, we just closed our fund 3 at about 8.5 billion. So for us, it's a young asset class, smaller universes of GPs to work with. How do you see from a Carlyle perspective in terms of the role infrastructure as an asset class plays in your business?
Well, it's very interesting. Infrastructure, as you know, was traditionally seen as something that governments would do, and in part because governments didn't think there was enough return for private sector investors to get involved with. And then as a result of what Macquarie Bank did in Australia with a number of airports and basically took that technique to Europe and the United States, the world over the last 25 years or so has seen that infrastructure investing can be profitable, recognizing it's not going to be as profitable as the most profitable venture capital investment of all time, but also has a lot less risk. It's not going to be as profitable perhaps as some very good buyout deals, but also has a lot less risk. And so the appeal of infrastructure investing, particularly with people who know what they're doing in that, is that you're going to be doing something useful for society. That's a plus as well. But more importantly, for investors who are concerned about rate of return, you're going to get an inflation-adjusted rate of return that I think is going to be above the inflation rate. In other words, the rates of return on infrastructure are probably going to be, on a core infrastructure, I'd say net of inflation, high single digits. And I would say, maybe more complicated infrastructure or core plus is going to be probably net of inflation, maybe low double digits, maybe even some cases middle double digits. But in an era when when inflation is very high, I think people want to make certain they're going to get something beyond the inflation rate. And I think the way that infrastructure tends to work is you're generally getting asset rate of return above the inflation rate. So I think it's a really safe investment, relatively speaking. And obviously you have the security of knowing you've got very good infrastructure underneath the investment. So I think it's a very good area in which to invest. As we all know, the trick is finding good greenfield investments to make. And the greenfield investments have more risk than brownfield investments in some cases. But I do think that people that are experienced in infrastructure investing can find really good greenfield and brownfield investments. And I do think this is going to be an attractive area in which to invest, particularly for investors who have large sums to invest and want to have a certain reasonably predictable rate of return coming from the kind of investments that infrastructure makes. And I think it will produce a reasonably predictable rate of return.
Yeah, David, I know you spend a lot of time with your largest LPs, right? I think part of the role, our platform, Carlyle Partners Group, as sort of private markets at scale, is to, from a societal perspective, is to channel those large amount of LP capital, whether it's pension funds, sovereign wealth fund, to areas that are productive, and we can also make return for them, right? And do you see in your conversation with your LPs, do you see that level of interest as you just described from Carlyle's perspective, as the GP interest? Do you see the interest from the LPs, and how would you characterize that interest?
Well, when we started doing infrastructure investments, most of the major sovereign wealth funds and public pension funds did not have an infrastructure category. They would say, well, maybe I'll put it in real estate, or maybe I'll put it in fixed income. They weren't sure what to do with it. Now, virtually every sovereign wealth fund and every public pension fund that I'm aware of, a national pension fund, has a distinct category for infrastructure. And that infrastructure is designed to get you a fixed yield, more or less, but also better than a typical fixed income product, because you're actually going to have a higher rate of return than a typical fixed income instrument. And as a result, people are increasingly wanting to increase their infrastructure allocations, and you're seeing more and more of that. And as the infrastructure investments have turned out to be fairly profitable, relatively speaking, I do think you're going to see more and more of that. Also, you should recognize, and everyone does, that there's a good social purpose behind this. There's no doubt that people can roll their eyes and say, well, private equity investments, how socially useful are they? Sometimes they are very good. Sometimes they may not be as good. But hardly anybody says infrastructure investments are not good, particularly the kind I'm talking about: energy transition infrastructure, digitization infrastructure. These are seen as having good social purposes, and I think that therefore increasingly sovereign wealth funds in particular are saying that they think they should have an increased allocation in that area.
Great. Yeah, that is, David, that's very consistent from what we have been hearing from our more than 1,000 institutional LPs. I think a very big subset of that, as you said, has now not only defined infrastructure as a separate asset class, but they are allocating a specific amount of capital to this asset class. And 10 years ago, I would say, 10 years ago, a lot of things were very different, right? There was no AIIB 10 years ago, and 10 years ago, I remember I wrote a short piece with my good friend Justin Ling, who was the chief economist at the World Bank at that point, actually titled that we should define infrastructure as asset class. I'm glad those statements are no longer useful, because today I think infrastructure has arrived as a very established asset class for investors to get their return, right? Maybe at this point, we could invite our other panelists to join. And David, and you wanted to say something, I see.
I would just simply say that there are very few words in the world that people respond positively to. One of them is family. People like family. So if you say you're a family investment or a family office investor, people like that. But if you say you're investing in infrastructure, nobody actually gets upset about that. That's because infrastructure has a relatively good and a very good connotation, and people recognize that infrastructure is an important area for society. So if you say you're an infrastructure investor, nobody's going to say to you, why are you doing that with your life? Why don't you do something more useful? People think infrastructure investing is a useful thing to do, and I agree with that.
I completely agree with David. And also I'm sure, David, you have traveled extensively in some of the Asian countries, right? China before, I'm sure before COVID, and you have seen some of the quality of infrastructures some of the Asian countries have built, which is something I think other countries could emulate for sure. And infrastructure simply transforms sort of the concept of time and space, right? You were able to get from A to B a lot faster, for example, in transport. Yeah.
Well, if a visitor from Mars came to see me and said, show me your best Earth infrastructure, I probably wouldn't take them to see the infrastructure in the United States. I would probably take them to see the infrastructure in Asia, because in many ways, the infrastructure in Asia is a generation or two ahead of the infrastructure in the United States, I'm sad to say. And I do think that Asia is setting the pace for making infrastructure investments the envy of the world. And I think that's okay. I think we need to have a goal and we need to have a standard, and Asia is setting it right now. And so I think it's something that I wish my own country would do a better job of, but that's a whole separate issue.
I think that is a very good time to invite all the other panelists, which I have introduced at the beginning, to join it, right? Because I think David talked about the quality of Asian infrastructure, how it is more advanced a bit than even some of the other regions. And so I think we can together, this panel can talk about why that is the case, what other countries can learn, and etc. Before I turn to the panel, though, I do want to add something. I think David said something earlier, right? AIIB today actually has 105 member countries, so it's no longer a very narrow regional organization. It has a global member base, and I believe it actually invests beyond Asia. That's my understanding, but I'm sure our AIIB's colleagues can correct me. So I think it is not only an Asia story; it is a global story. Let me have a couple of questions with my panelists. So Alicia, you're an economist. I wanted to ask you first that David talked about economic downturns we see today, right? We all know those significant economic challenges that all the countries are facing, actually, right? In a different way. Economic downturn, inflation. I think the search for that economic drivers for each of for all the economies, bearing those macroeconomic situations in mind, Alicia, what do you think the role that infrastructure could play?
Well, thanks very much for the invite. It's a pleasure to be with you all. I'd like to say first that if there was a good time for infrastructure, that was the era of the Great Moderation, and we've gone past that. Yeah, we're in a world of high interest rates, which means that basically the liquidity and the return that an infrastructure investment needs to yield is going to be higher to compete with any financial investment. Yeah, and therefore I would start from the negative side of the story, but I'll move on to the silver lining in a minute, is that we've passed the best times, at least, within this cycle. This is especially true for the emerging world, including Asia, although inflationary pressures in Asia are more moderate to the point of actually being absent in the case of China. Rather absent, at least when we focus on core inflation, we still fear that interest rates will be higher except for Japan and China. So, they're actually getting much higher. I mean, you have central banks in the region from India all the way to Australia hiking. And I think that's something we need to realize, that this is not good news in essence for this particular asset class. But as everything, not because you didn't accomplish, or at least you didn't finish your project, developing enough infrastructure in Asia as needed, that not because you didn't do it in the good times, you're not going to do it anymore. I mean, it's just going to be more costly, but it will be done. And I think one of the reasons why it can be done is that Asia is a dual reality. And let me explain you what I mean by that. Asia is a region, I think it's the only region in the world where you have half of Asia, literally, with aging population and naturally low rates, maybe not as much now as they were before, but still naturally low rates because it's an aging society. And we all know that aging pushes interest rates down. At the same time, and by the way, this part of Asia, China is there, many, Japan, even Thailand for that matter, is aging. Generally good infrastructure, that part of Asia. At the same time, which is, I call this a marriage of convenience for whatever it's worth. The other side of Asia is young and lacks infrastructure. So as opposed to, what much more negative trends, in my view, in Africa or in Latin America, where you basically need external savings to come and help with the infrastructure. In the case of Asia, you can do it through this marriage of convenience, basically elderly Asia, or at least aging Asia, putting those excess savings to work within the region. And I think this is what is going to mitigate this negative kind of super cycle, or at least cycle so far, of high interest rates in the world, which is the good news, in my view, for Asia. Now, of course, still, capital won't be as abundant as in the era of great moderation, even in Asia, notwithstanding the marriage of convenience. So you need to choose your projects. And I know that AIIB is, of course, a very good story on this front. And I think the whole point is that even if we didn't need policy banks or development banks or public funds for infrastructure, we still need this direction of what is needed. And in that regard, I think your role can't be really substituted, no matter the marriage of convenience. Well, you're needed because in a world of capital shortage, or at least compared to the past, you need to choose your bets. And as we heard from David, I fully agree. And this is the same story with Europe, by the way, with the Next Generation Fund. So this is all about digital and green. And that's where Europe is, not only Asia, I have to say. So in that regard, Europe is very aligned with Asia and moving ahead on green transition very, very fast. So is Asia. So I think that's basically my message. Choose your bets. I think Asia is choosing. Europe has already chosen, and they're the same choices. And use your marriage of convenience to make it easier to finance infrastructure with the help of the knowledge offered by development banks, because you need to choose more than ever. And that would be it from my side. Thank you.
Thank you, Alicia. I think that's an excellent point where I think Alicia used the phrase of marriage of convenience, right? Which is something that we have talked about in Asia. We do have the capital driven by the savings rates, and there is a big part of Asia that does have the need for additional infrastructure funding and capital. Then the challenge is for all of us on the panel as an investment platform, whether a development bank or private equity firm or a venture like Primat, right? What are we going to do, and what also the governments are going to do, right? So why don't we now then focus on this question of private capital? You have capital, you have the needs, right? The challenge is how do you get the capital to those needs, whether it's to generate investor interest or select the right assets, right? Even though we're talking about private capital, the role of government is very important, right? Lito, you have served in the government side for a long time. And can you share with us a little bit on this very specific question, channeling private capital to infrastructure, but what could government do to make it more conducive for the investors?
Yes, thank you, Kevin. I think it's a very profound question, because government will have to play a very important role in mobilizing private sector capital into infrastructure, particularly in the region. I think to answer that question, one has to look really at the different roles that the government plays in this space, right? On the one hand, you have government as regulators. And I think as regulators, governments will have to be able to convince private sector capital that it is safe to invest in their particular economies. And that will require regulators to make sure that there's consistency on the application of laws and regulations in their respective economies. That is not always the case, particularly in this region. I think the question of level playing field, whether you are dealing with private or public sector investors, or whether you're dealing with foreign or domestic investors, I think government regulators will have to be able to demonstrate that they will be able to provide level playing field to give confidence, particularly to private sector investors, that their money will be safe, in that it will be able to compete with a level playing field. Another important aspect of regulation and policymakers is the sanctity of contracts. I mean, let's not forget that for private sector capital to invest in infrastructure, many of them really do that in the form of PPPs, or public sector partnerships. That involves concession agreements, contractual agreements with government and with government agencies. And again, the record of the sanctity of contracts being honored over the last couple of decades have not, been very consistent. So I think for government as regulators, they have to be able to demonstrate that they will be able to provide an environment for private investors in their respective economies, whether domestic or foreign, and be able to compete on level basis. I think the government also plays a role in policy making, whether as legislators or in the promotion of policies within their economies. What do I mean by this? For example, the promotion of PPPs in some countries, the state, through either state-owned enterprises or government itself, have dominated the build of infrastructure. We know that because of the pandemic, many governments, including in our region, are a little bit more stressed as far as fiscal resources are concerned. I will include the Philippines, that over the last 3 years has suffered, very, very elevated levels of fiscal deficit, which means that they will have to rely on private capital even more for infrastructure. So, I would like to see governments to be active promoters of PPPs in their economies. I think the development of infrastructure investment as an asset class. You mentioned, Kevin and David, that this is growing. I think it can grow a lot faster if governments can legislate legal frameworks that would allow more investments into infrastructure. What do I mean by this? I'll use 2 examples. There's the business trust legal framework in Singapore, and the infrastructure fund legal framework in Thailand. this is really allows for the monetization of assets that are already invested in infrastructure so that you can recycle capital. Not very different from the more traditional REITs or real estate investment trusts that I think most of us are more familiar with. I think you could do the same with infrastructure assets, and which will then allow for a mobilization of private capital by being recycled back into new infrastructure. And then finally, governments, as mentioned by David, are also investors themselves through sovereign wealth funds, through government pension funds, and other instrumentalities or agencies that the governments have that invest in assets. And I think as a show of commitment and confidence in their respective economies, I'd like to see governments using their various pockets of capital to co-invest with the private sector, particularly in the capital markets, whether it's in equity or fixed income, or even in private equity that are very focused on infrastructure. So government, I think, has a big role to play in continuing the availability of capital and the mobilization of private capital in particular into infrastructure.
Thank you, Lito. I think what you have covered is a very important feature of infrastructure as an asset class, right? I think David mentioned a couple of them in terms of the inherent desirability, positive societal impact. That's one thing infrastructure has. The other is infrastructure as an asset class. You almost have to have government involved one way or the other, unlike some of the more plain vanilla corporate private equity that David's firm and my firm are engaged in. And but the other thing I wanted to ask, I want to go to Premod now also to talk about another different aspect, which is innovation, right? Product innovation. You know, I understand that that Bayfront is doing something interesting to securitize certain cash flows, and I also understand you are a joint venture, sort of joint partnership between AIIB and Clifford Capital. And by the way, I still recall those meetings with Temasek and other part of Singapore Inc. 12 years ago to create Clifford Capital. So I'm glad that the whole enterprise has grown, right? So Premod, can you share with us a little bit of what you are doing from an innovation perspective, securitization, and other things that is helping the capital to flow into infrastructure? Premod?
Thank you very much, Kevin. Good evening, everybody. Great pleasure to be on this panel with you. And to all the listeners on this, a very good evening, good morning to you. Bayfront was set up 3 years ago as a joint venture, like you said, between the Clifford Capital Group and the AIIB. The Clifford Capital Group is majority owned by Temasek, and has among its shareholders the ADB, as well as 3 commercial banks and 2 insurance companies. AIIB joined as a 30% investor back in 2019 and has been a very significant and influential shareholder in everything we do. We were set up primarily with the objective of helping to bridge this huge gap in infrastructure in Asia, a large gap and a growing one, where for a number of reasons, this large wall of capital that is present, that we all know about among private institutional investors, was having trouble getting to the right kinds of investment opportunities in scale and at appropriate times. And our objective, as we set out to with this company, was to help address this gap and to create a channel for institutional investors to get into Asia-Pacific infrastructure debt. So this was primarily the mandate. There's a huge recycling mandate as well around banks that have traditionally been the dominant player in infrastructure debt in this part of the world, and who over the last so many decades have played a very important role in originating and holding long-tenured infrastructure debt to maturity. And we're increasingly finding it very difficult to continue doing this because of Basel, in the aftermath of the GFC, the kinds of regulations that made it increasingly difficult to hold long-tenured assets to maturity. So we played a role intermediating between banks that were very good and continue to be very good at originating infrastructure-led project debt, as well as institutional investors who were keen to get in but didn't have a ready access to such projects. So what we did was tying up with a large number of these banks. We have 26 banks with whom we have MOUs and who contribute brownfield infrastructure debt to our platform. We take this debt, warehouse it, and then securitize it by coming up with a capital structure that provides a set of listed and rated notes to institutional investors who then have a menu of potential investment opportunities to choose from. We as sponsor hold the bottommost part of the capital tranche, the equity piece, and we hold that to maturity as a means of creating clear alignment with institutional investors who participate in tranches above us. We've done 3 transactions so far, one in 2018, which was our pilot, followed in 2021 and 2022. The last transaction closed about a month ago, where we issued into this market, the most recent transaction done in very stressed market conditions, as you'd imagine, where we were able to successfully put away these classes of notes, typically a AAA, a AA, and a BBB tranche, where these were put out to insurance companies, a couple of pension funds, sovereign wealth funds who showed interest, asset managers, as well as bank treasury departments and some private wealth accounts. So it was a means of creating this transference between the balance sheets of banks that were looking to increasingly recycle and institutional investors who were looking to get into this in a format that made sense. These notes are rated by Moody's and are listed on the Singapore Stock Exchange, thereby creating liquidity as well as transparent credit ratings. We expect to be in the market every 12 to 15 months. Our partnership with the AIIB has been extremely strong in the areas of them supporting the issuances through the whole ENS methodologies that we've incorporated in our own methodology, as well as in the sustainability piece. We've increasingly built sustainability notes in our last 2 issuances, where 30% of these notes were in the form of sustainable notes, primarily reflecting underlying assets such as solar, wind, geothermal, as well as certain social projects, which form the backbone of these sustainability tranches. This got a lot of interest from institutional investors who were willing to pay a small green premium to make the case that they were genuinely interested and willing to pay for this particular participation. So we expect to do more of this in the years ahead. As I said, be back in the market every year, 12 to 15 months, with increasing issuances. And the sustainability piece will be an increasing focus for us, as reflected by the strong demand that we have out there among institutional investors that focus on this product.
Thank you. Thank you, Primad. I think that's an excellent introduction of a very specific platform and innovation that is playing an important role to intermediate that capital, right? So if I can go back to the panel, which I hope they will be all on the screen in a second, because I don't see them at this moment. I'll go back to David, which is for Carlyle as a platform to intermediate between the LP capital and the infrastructure need. I'm sure you have hurdles. Yeah. Okay, sure. Yeah. Okay, we will ask that question to David later. Maybe let's go to Alicia then, as per my order. And Alicia, you work for a large bank, and Natixis plays an important role to intermediate that capital as well globally, not only in infrastructure but other flows. What do you think the banks could do? What are the hurdles that banks facing to channel more capital, to go back to your phrase, the marriage of convenience, to make the capital flow to infrastructure? Alicia?
Can you hear me? Yeah, that's great. I can see myself, so that means you can hear me. So I think, the hype of fintech solving every problem globally is gone, isn't it? I think we've understood that this is about complementarities, and and banks do exist for a reason. They exist because, as you rightly point out, they have capital. That capital can be leveraged and deployed, and banks can actually take risks that not every single fintech institution can take. And I think that's the point. Banks are well suited to be part, certainly not the solution, but part of the solution for infrastructure financing, and that's where everybody, including Natixis, should play a role because this is so essential for growth in the future. We need to realize something very important, which is that productivity globally is coming down. Growth across the board is coming down, and it's not only cyclical, it's also structural. So unless we make our way in basically structurally changing a number of inefficiencies we have built globally, one is certainly carbon emissions and what that means now in terms of cost of solving what we ourselves have created, we will go nowhere. So banks are there to help. That's why they have the capital needed to do so. And that's why I do think they will play increasingly. The more interest rates remain high, the more their role in this infrastructure financing will be, because it will be so hard to raise funding, and because banks have that leverage ability through their capitalization, they will be more useful than ever. That would be my take on your question.
Yeah, Alicia, while I have you on the screen, let me just ask a follow-up question to you, then I'll go to the other panelists, right? You talk about the low interest environment. I think David mentioned about that as well. I think the other big change we all see today is there is a rethink of the whole topic of globalization and global supply chain, right? I think you can take that in different ways. In those two areas, right? Low interest rate, globalization being rethought. Do you think private sector should adjust their thinking in terms of infrastructure capital flow? Alicia, I'll go to you first. I'll go to the other panelists.
Yes, I'll be very quick. I think the private sector needs to be more agile as regards infrastructure by thinking basically in modular form. And what I mean to say is that, as David pointed out, we are in a highly uncertain world, both because of climate change, but also geopolitics. And because of that, we need to think modular. We can't think the world is flat anymore, because it isn't, for many reasons, from earthquakes to US-China systemic rivalry. And that means that we need to be smart in the way we build our infrastructure. That the infrastructure needs to stand to both geopolitics and climate change. And that's a challenge, but that's the way we should build it. So basically, that would be my answer to your question.
Great. David, can I come to you? In the second part, there's a retreat from globalization, right? What's your take from a private sector investor going to infrastructure? How do you pitch that in this environment?
It's an interesting phenomenon in the sense that globalization has been seen by many people outside the United States as benefiting the United States. And it did in some ways. We imported many cheap products, less expensive than we could produce in our country. We had elaborate supply chains to keep the cost of goods down, and we actually kept our inflation rate down. Many people in the United States, though, did not like it because they saw it as increasing, let's say, the productivity and the wealth of, let's say, Asian countries, including China. And many people in the United States who lost their jobs in the Rust Belt and other parts of the South think that globalization was really not a plus for them. So it's an ironic situation. Many people outside the United States thought that globalization was really helping the United States in many ways. And then a fair number of people in the United States didn't actually think globalization was helping them. But globalization that we saw in the last 20 years is dormant for the time being, in the sense that now supply chains are being changed. Many people in the United States, companies, are saying, we can't be dependent on, let's say, China or Asia for our products, our medical masks. If we were so dependent on getting medical masks for COVID from China that we basically had states fighting with each other over where to get medical masks from. And we're not going to allow that to happen again, I think, in the United States. Also, you should recognize that globalization is another word for keeping inflation down. And to the extent that you get away from globalization at its maximum, you're going to increase inflation. And so we should recognize that inflation is probably not going to be tamped down so quickly when we change our supply chains and we do different things than we did during the era of globalization.
Thank you, David. Lito, do you have anything to add on this topic on globalization 2.0, whatever you call that, and the impact on private capital and infrastructure?
Well, I think clearly, as mentioned by David and Alicia, globalization is seeing a retreat around the world, driven by geopolitics. However, I just want to stress that notwithstanding that, domestic demand for infrastructure will continue, especially this part of the world. I think one aspect that has not been mentioned is continuing urbanization in places like particularly in Southeast Asia, which will continue to increase the demand for infrastructure. So I think notwithstanding the reversal of globalization, I think I expect, particularly as the pandemic is waning, that economies in this part of the world will start recovering as domestic consumption grows and infrastructure demand will go up again.
Thank you, Lito. I think David also mentioned about the different winners and losers in the first wave of globalization, or the perceived winners and losers, right? So I think it's not a coincidence that a few of us are actually based in Singapore, in a way that a country like Singapore actually benefited from the connectivity, the increased connectivity of the world, and also in the sense that places like Singapore is in a position to build a very strong ecosystem for different players to contribute to whatever Singapore is trying to promote, right? So in the case of infrastructure, Primad, you are based in Singapore. How do you see Bayfront operating in the ecosystem? Go back to also Lito's question. There's a role for government to play. There's also a role to many other players to play, right? So any comments on the whole ecosystem, multiple players that are needed to promote infrastructure financing? You're on mute, I think. Primad, you're on mute at this point.
Clearly a role, thanks, Kevin. Clearly a role for partnerships to build. I mean, clearly the government has been extremely active and influential. A number of agencies that have been set up here, Infrastructure Asia, a number of other agencies that focus primarily around infrastructure. Bayfront and Clifford Capital Group was set up primarily to help with the infrastructure gap. The focus has been on trying to create solutions that are suitable for not just for Singapore, but for the larger area around us, the larger set of geographies, Southeast Asia in particular. The infrastructure needs are huge, to Lito's point, and growing. There's been a quantum leap in the kind of infrastructure projects being pursued. David raised that right up front, 21st century infrastructure. There's a lot of work going on around the region around energy transition. The ADB has been very strongly involved in some of those and announced quite publicly around what they've been doing. And with some of these big areas of emphasis, we see a huge amount of activity, globalization waning notwithstanding, because the needs are local, the investments are likely to be local, and to the extent that there is institutional investor capital that can help in some of these local endeavors, these will go on. And there will be the current blip that we're seeing, high interest rates, inflation, supply chain dislocations, and all of these points mentioned. But the needs are real, they're ever present, and there is a quantum jump that infrastructure developers and governments are engendering through making this leap to sustainability, transition, digital infrastructure, and all of the things that are required by a rapidly urbanizing set of societies in this part of the world.
Thank you, Primad. I think I will give an audience a chance in a few minutes to ask some questions. But before that, we are at AIIB's annual meeting. So I wanted to also focus a little bit on AIIB itself as a platform. Right, Lito, you are on the advisory panel for AIIB. And what's your take? I think we're all talking about intermediation, facilitate the capital flow to go. What's your take on what AIIB is doing in this space?
Well, I've been a member of the International Advisory Panel for a few years now, and I must say, as articulated by Constantine in his opening remarks, AIIB has done a fantastic job in not only providing conventional financing debt and primarily debt to sovereigns and non-sovereigns in the way other MDIs or multilateral development institutions are doing, but really looking at more creative, more innovative structures as they have done. As we have heard Constantine elaborate. I think it speaks very well of the agility of the AIIB and also the attitude that they have to do better and more I think it also addresses some of the gaps that remain, and there are still gaps that remain in creating financing for infrastructure. There are two that I might want to highlight. One is currency risk. I think we should not underestimate the currency risk, in as much as most infrastructure assets generate local currency revenues, whereas most capital that's available are either dollar or non-local currency. And I think there's a role for an institution like the AIIB to intermediate, work with central banks on providing long-dated swaps, being able to provide local currency financing to be able to address this issue of currency mismatch in most infrastructure assets. The second gap that I see is also the higher need for greenfield capital as opposed to brownfield. To a large extent, what's available in the public capital markets as well as private capital is really an appetite for brownfields, but not so much for greenfields, particularly in the pre-commercial operation stage of many projects. Mentioned by Alicia, this has been dominated by banks, domestic banks, regional banks. But given the scale of requirement in infrastructure, bank capital would not be able to provide what is needed at the level during the project development stage. And again, there I think innovation AIIB can play a role in innovating and being able to provide capital or risk mitigation or risk enhancements during that period of project development. So I think the AIIB, if I were to grade it, deserves a B+, perhaps an A- in terms of fulfilling its mandate. But there's a lot more work that it can do, and I know that the management is very open and very receptive to new ideas.
Thank you, Lito. I'm getting a few questions from the audience, so let me quickly ask all of you. I think we only have about 10 minutes, so if you can be very quick in answering those questions, that'd be great. One of them is about emerging market infrastructure in particular, right? So we talk about infrastructure is a relatively new asset class. I think some investors are still trying to get used to that. But if you segment that, the emerging market part, then it's even newer in a way, right? So the traditional LPs may see emerging market infrastructure as a little bit riskier. I think we talk about risk mitigation. How do you see emerging market infrastructure? What could private capital do? What could all our platforms do to make that the emerging market infra as an asset class? Anyone want to pitch in?
Maybe I'll just continue the comments I was making earlier, and that's the role of AIIB, particularly in emerging economies in Asia. I think this is where the risk mitigation capability of AIIB and to be able to take risks that otherwise private capital might not be able to, I think is very, very critical. And I think that, again, to a large extent, they do that already, particularly in lower income economies. But things around currency, things around the project credit risk, I think are areas in emerging markets that will be problematic unless you have AAA, AA names like AIIB participating in mitigating those risks.
I'd like to add a point there on the Bayfront platform and the infrastructure asset-backed security, which is what we produce for institutional investors. This was primarily designed with a view to getting emerging markets actively involved in terms of getting projects financed in those markets. Through the securitization technology, we were able to assemble pools of loans, like 35 to 40 loans per issuance across 13 jurisdictions, across 8 industry sectors. And a number of these jurisdictions were emerging market jurisdictions. And by virtue of the diversification effect, a large number of emerging added to investment grade countries, we were able to create a diversified pool that Moody's was able to rate at very high levels, and therefore, and following which institutional investors were able to come into those notes and thereby participate in emerging markets as well. So the technology that we used actually was designed to get as broad a group of participating countries as possible, notably emerging markets.
Thank you, Prima. Alicia, you want to add something? And then David?
Yes, very quickly and much more generally. Of course, it's not going to be an easy ride for EM infrastructure, but I have 2 things, positive things I like to add. One is that we can't forget, we meaning the developed world, our commitments at the COP26, which is basically we're going to help finance green transition in the emerging and certainly frontier markets. So we have to do that, yeah, and that's part of the solution. And on the digital transition, I think the pandemic should have shown the way, yeah. I mean, there's always the weakest link is actually our problem as well, and for that matter, I think digital transformation is key for resilience, and therefore the developed world again needs to realize that financing is needed. In fact, we wrote a piece for the G20 that for the basically the Indonesia presidency on how we could utilize the tax revenues that would be created out of the harmonization of corporate tax, and the best use that we thought could be given would be to indeed improve digitalization in the emerging world. So in other words, we can think of innovative, original ways to deal with these two things, at least digital and green, for the emerging world, because tough times are coming, and there's no way that we can solve this without some transfer of funding from the developed world. Yeah.
That's a great point, Alicia, from a developed country. David?
Well, it was the Prussian leader, Bismarck, who famously said that there are two things you don't want to see being made. One is legislation, and the other is sausage. And he might have also added, had he lived longer, emerging market infrastructure. Because emerging market infrastructure is very complicated to do. There are obviously, let's call it, accountability issues that you have to struggle with. And so obviously brownfield issues are a little bit easier than greenfield issues in getting an emerging market infrastructure project off the ground. However, that should not deter people. And I don't say this as somebody coming from a country which is not free of its own accountability issues on putting together infrastructure projects. But one should recognize if you're going to invest in emerging market greenfield infrastructure, you're going to have to deal with a lot of accountability issues, and it's going to take a lot longer time than you think to get some of these things off the ground. I hope that changes, but that's been the experience in the past.
Yeah, David, I completely agree, right? I think in our conversations with our private sector investors, the LP community, I mean, you can simplify that by saying they want to see the upside, right? So they want to see the financial upside. In this case, infrastructure as contracted flows, which are useful, but they want to see those downside protected, whether it's accountability, whether it's risk mitigation by involvement of AIIB type organization or MEGA guarantee, right? So they want to see the downside protected, number two. And number three, they want to be able to find ways to actually implement their sort of search for yield and low risk, right? So I think that requires all of our platform to do our part, right? I have one final question for all of you, I think, which I did not give you a heads up because I want you to think on the spot. And maybe you can, I think we've covered a lot of grounds today, right? We started from Alicia's marriage of convenience to David talk about the asset class that is now much more becoming and other examples. And what is one thing you are working on that is the most exciting for infrastructure capital? You all do very different things. So I will start with mine, and then that will buy you some time. And on my side, we are looking at infrastructure as a much more developed sort of asset class, right? So we are going to raise our fourth infrastructure fund. Our last fund was 8.5 billion. I think we're going to raise a bigger fund at some point, and we are looking at both developed and emerging market countries. One of the solutions we have is to put them together so the investors can get exposure to a portfolio, rather than, as David said, if you just go out to say you are greenfield emerging market, all these risks is going to sort of become a problem for our investors, right? So think about the one thing you are doing, in whatever capacity. I'll go to David first. And are you ready the emerging market infra fund, David? That's a hypothetical question.
Yeah. So let me just answer your question slightly differently. Recently, for PBS, Public Broadcasting System in the United States, I filmed a special that'll be aired next year, and it was on a major infrastructure project called the Golden Gate Bridge. And this is an engineering marvel, but some of us may forget that it was very controversial at the time. It took, there were 4,000 lawsuits filed to keep it from being built, because people thought this is going to ruin San Francisco, ruin the whole area. And obviously all those lawsuits were ultimately dismissed. It also took 4 years to get built, quite a long time. And my point is only that infrastructure is always complicated. It's never going to be easy, but anything in life worth having is a struggle. And so the Golden Gate Bridge got done. It's obviously been a great thing for the San Francisco Bay Area. And I think anytime you're ever thinking about the complications of an infrastructure project, think about the Golden Gate Bridge and how it got done, despite all the objections that were launched against it. Thank you.
Great. That's a very optimistic comment. Can I get the other comments in 30 seconds or so from each of you who want to start?
Let me make an attempt, Kevin, at some concluding remarks. In my case, two of my personal favorite advocacies is really the promotion of the idea of infrastructure trust as an instrument that many governments, particularly in our region in Southeast Asia, can do. I think we already have two examples that I've mentioned. I think it's one that will create more significant participation from the capital markets into infrastructure. The second is really finding ways to address this currency mismatch that I've mentioned, and I've discussed this with the AIIB management. When I was Secretary of Finance, I was also working with the ADB at the time. I think central banks in all countries are long foreign currency, short domestic currency, local currency, and they're a natural counterparty to an AIIB or other parties, institutions, to do long-dated currency swaps that can then be applied to infrastructure projects in their debt financing. So those are the two things that I personally find very, very transformational.
Thank you, Lito. And Primad, you want to go next? And then Alicia, you will wrap up. Yep.
Our focus at Bayfront would be to deepen and broaden the infrastructure asset-backed security asset class that we are in the process of developing. We will be pivoting it increasingly towards sustainability, not just the traditional green sectors, but also new emerging sectors such as hydrogen, ammonia, CCUS technologies, as they pass the inflection points, as many of them are coming to, and as they become commercially productive, we hope to get increasingly involved as we bring such projects, brownfield projects for the major part, to institutional investors.
Thank you, Primad. Alicia?
In the 30 seconds left, I just want to remind the audience that we all hold savings through pension funds, or pay as you go, which could be somehow be given a huge pool of savings to use for infrastructure projects, because that's the right maturity. And there are countries who've tried that very hard. Chile is a very good example. We need to see more of that in Asia, in my view. So that pension pool needs to be utilized for the right infrastructure projects.
Thank you, Alicia. At this point, let me invite Konstantin back, who will do a quick wrap up. And Konstantin, the mic is yours.
Thank you. Thank you very much indeed. It was really very interesting and rich discussion. And I'd like to, first of all, thank you, Kevin, for actually preparing this provocative and very interesting questions for the audience. I heard a lot of ideas which would be actually very practical for AIIB, and I'm sure that for our audience as well. And I would like to thank David as our opening speaker for sharing his insights and setting the stage and putting infrastructure for the global context. Very interesting views of Alicia and Tia Camacho. We do remember the trust, and we will be working on that, but we are already progressing with the risk capital for the green field infrastructure companies promote. Very grateful for you to share your views, and we will continue being innovative in the capital recycling part with one of the few institutions who actually taking it really, really seriously and investing into that infrastructure of the future. To conclude, I would like to emphasize our gratitude to all the speakers. Private capital mobilization, private sector development is in infrastructure, of course, our critical need today. We as the senior management of AIIB is fully committed to work with the private sector players and leveraging the huge potential of the development development financing institutions, especially AIIB, of course. For the Asia and beyond, there was a question of whether we can do global financing. Of course, we are a global institution with a very sharp focus on Asia. With that, I thank you very much, and thanks to audience for staying with us. And I hope that you are enjoyed it. Thank you.